So let's talk about a battle that's happening right now, right inside your wallet. It's a conflict that's been brewing for decades, and believe me, it is about to change the way you pay for absolutely everything. We're going to dive into why that premium rewards card you love might soon be useless, or even worse, decline.
I want you to picture this. You're at your favorite coffee shop, maybe the grocery store, doesn't matter where. You pull out your go-to travel rewards card, all set to rack up those sweet, sweet points. You tap to pay, and the machine just beeps back at you. Declined. Now, you know there's money in the account. You know your credit is totally fine. So what on earth just happened? Well, this isn't some hypothetical glitch. It's a new reality that millions of Americans are about to face, all because of a hidden war that has just hit a major tipping point.
And the stakes in this war, they are astronomical. I mean, we are talking about a battlefield cost of over $38 billion. But here's the thing. This isn't a cost paid by governments or armies. Oh no, it's a cost paid by every single one of us, hidden in the price of gas, groceries, you name it. This is the key to understanding why the simple act of swiping a credit card has become the front line of a massive financial conflict.
All right, to make sense of all this, we're going to break it down. First up, we'll unmask the main villain of this story, the swipe fee. Then, we'll look at how the rules of engagement are totally changing after a 20-year legal war. We'll explore what your new reality at the checkout counter is going to look like, and then we'll ask the big one, are your rewards now basically worthless? And finally, we'll take a peek into the future of your wallet.
Okay, let's get right to the heart of the matter. Every single time you use your credit or debit card, a hidden fee gets triggered. It's officially called the interchange fee, but most people just call it the swipe fee. And you can think of it like this. It's kind of like an invisible tax you pay on literally everything you buy with a card. But who's paying it, and where is all that money going?
So the swipe fee is a percentage of your transaction that the merchant, the store you're shopping at, has to pay. But it doesn't actually go to the merchant's bank. No, the merchant's bank pays it to your bank, the one that issued you that shiny card like a Chase or a Citi. Now, this fee is supposed to cover things like processing costs and fraud risk, but what's really wild is that this single fee is the largest chunk of the cost a merchant pays to accept cards at all, often making up 70 to 90% of the total.
And this, my friends, is where the conflict really heats up. Because not all cards are created equal, not even close. Let's just look at the numbers here. If you make a $100 purchase with a standard regulated Visa debit card, the swipe fee costs the merchant about 26 cents. Okay, manageable. But what if you use one of those fancy premium rewards cards, like a Visa Infinite or a Mastercard World Elite? All of a sudden, that fee skyrockets to about $2.70 on the exact same $100 purchase. That's 10 times higher. The merchant makes less profit simply because of the type of plastic you decided to pull from your wallet. And that massive difference, that's the economic fuel driving this entire war. Now you might be thinking, merchants just eat these higher costs, right? Well, not exactly. To cover this really unpredictable expense, they just raise the prices on their goods and services for everybody. This creates what a lot of critics call a reverse Robin Hood effect. You've got people who pay with cash or low-fee debit cards who, let's be honest, tend to be from lower-income households. They end up paying these inflated prices. That extra money they pay effectively subsidizes the fancy airline tickets and cashback rewards that affluent premium cardholders are racking up. In fact, the Merchants Payments Coalition points out that this hidden fee costs the average American family over $1,000 a year.
So, if these fees are so darn high, why don't merchants just say no to the expensive cards? You'd think they could, right? Well, for decades, they couldn't. And that frustration boiled over into a massive 20-year legal war against the credit card giants Visa and Mastercard. A war that, believe it or not, has just reached a really dramatic turning point.
So the fight officially kicked off way back in 2005, when merchants filed one of the biggest antitrust lawsuits in U.S. history, basically accusing Visa and Mastercard of running a price-fixing cartel. After years of fighting, a $7.25 billion settlement was proposed in 2012, but major retailers like Walmart and Target said nope, not enough, and it got overturned. Then in 2019, a smaller settlement paid merchants for past damages, but it did nothing to change the rules moving forward. The real drama, though, unfolded in 2024. A supposed landmark $30 billion settlement was announced, only to be rejected by a federal judge for being inadequate. This forced everyone back to the drawing board, leading to a brand new proposal submitted in late 2025 that could truly change everything.
So, what's actually in this new proposal? Well, first, it offers a bigger fee reduction than before.
But merchants are already arguing this just kind of resets the fees back to 2023 levels after all the recent hikes. But the second and third points, hoo boy, these are the real bombshells. For the first time ever, the foundational honor all cards rule would be weakened. This means merchants could be allowed to accept certain types of Visa cards, like a basic one, but flat out reject others, like your high-fee premium card. And finally, the rules around surcharging would be simplified, making it way easier for businesses to just add a fee at checkout if you use a credit card.
Okay, so this isn't just some legal mumbo-jumbo or a problem for big corporations. The outcome of this settlement is going to hit you directly, every day. Let's break down what your new reality at the checkout counter is actually going to look like.
To really get the magnitude of this change, you have to understand the honor all cards rule. For decades, this was the bedrock of the whole system, the golden rule, if you will. It meant that if a store had that little Visa logo on the door, they had to accept any Visa card you handed them. It created a seamless, predictable experience for all of us. But merchants have argued forever that this is an illegal tying arrangement, forcing them to accept those expensive premium cards if they want to accept the much more common basic cards. This new settlement puts the first major cracks in that foundation, giving merchants a powerful new weapon, the ability to just say no.
But even if merchants are a little hesitant to outright decline your card, because, they don't want to lose a sale, they now have another option: make you pay the fee. And this is leading to the rise of what many are now calling the surcharge economy. The era of one price for everyone is ending. The price on the sticker may no longer be the final price you pay if you choose to pull out a credit card. Now here's where it gets really messy. The ability to add a surcharge isn't the same everywhere. It's a confusing patchwork of state laws. As of late 2025, you've got states like Connecticut and Massachusetts that have outright banned them. New York has restrictions, requiring businesses to frame it as a cash discount instead of a credit card fee. States like Colorado have a cap on how much they can charge you. But in most other states, including big ones like California, Texas, and Florida, surcharging is now totally allowed, as long as they tell you about it. This means your checkout experience could be completely different just by crossing a state line.
And the ripple effects of these fees, they're spreading in some pretty controversial ways. One of the hottest issues right now is something called tip garnishing. Restaurants, which operate on razor-thin margins, are increasingly passing that credit card processing fee not just onto your bill, but onto their employees' tips. So let's say you leave a generous $20 tip on a $100 bill. The restaurant might deduct the processing fee for that tip amount, around 60 cents in this case, directly from the money that's supposed to go to your server.
Well, 60 cents might not sound like a lot. It adds up dramatically. For a busy server who earns maybe $1,000 in tips in a good week, those little deductions can add up to $30 a week. Over a whole year, that's over $1,500 of lost income, taken directly from their pockets, all to cover the cost of credit card processing. It's a practice that, while legal in many places, has sparked some serious backlash from customers who want to make sure their tip actually goes to the staff. So this brings us to the crucial point for so many of us, right? What does all this mean for the credit card rewards, the points, the miles, the cash back that we have so strategically collected for years? With merchants now able to either reject your card or charge you extra for using it, we have to ask the big question. Are your rewards about to become worthless?
Let's just do the new math. It's actually pretty simple and kind of brutal. In the old world, if your card gave you 3% back on a purchase, your net gain was 3%. Easy. But in this new surcharge economy, the math changes completely. Your card still gives you 3% back, but if the merchant adds a 3% fee to use that card, your reward is completely wiped out. Your net gain is zero. Boof, gone. All of a sudden, the entire value proposition of that premium, high annual fee card in your wallet just evaporates. You're basically paying a fee to the merchant just to get that same amount back from your bank.
But look, this settlement is not the end of the story. Not by a long shot. It's really just one battle in a much larger war for control of your transaction. Looking ahead, there are even bigger forces at play, both in Washington and in Silicon Valley, that could completely disrupt the way we pay for things. So what does the future of your wallet really look like?
Well, it seems like there are two major paths forward. The first is legislative. There's a bipartisan bill looming in Congress called the Credit Card Competition Act. It would force large banks to offer at least two different network options on their credit cards, say Visa and a competitor. This would force the networks to actually compete on price to win a merchant's business, which could lower swipe fees for everyone. The second path is all about technology. New pay-by-bank options are popping up, which link directly to your bank account and bypass the card networks completely. For merchants, these transactions cost just pennies, which means they could offer you some serious discounts to use them instead of your credit card.
So what's the big takeaway from all of this? I think it's that the golden age of easy, friction-free rewards is likely coming to an end. For decades, the true cost of the whole credit card system was hidden from us, the consumers. We are now entering an era of payment transparency, an era where the real cost of earning those airline miles will be printed right there on your receipt as its own line item. The power is shifting, and for the very first time, you'll have to consciously decide if those rewards are actually worth paying extra for.
We really hope this explainer helped you get your head around the massive changes happening in the world of payments. If you found this breakdown valuable and you want more explainers on the financial topics that really affect your life, please take a quick moment to like, share, and subscribe to the MoneyWise Dollar channel.
And that brings us to the final question, and it's for you. Now that you know the hidden cost behind your credit card rewards, is it going to change the way you pay for things? Are you going to start carrying more cash? Maybe switch to a debit card? Or are the rewards still worth the potential new fees? Let us know your strategy in the comments below. And hey, while you're there, tell us what financial topic we should break down for you next. We look forward to seeing you there.